Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, October 31st, 2021. Friday's trade was very interesting, as I had laid out on last Thursday's update, that when I took a look at the options that were expiring on Friday, particularly in Tesla, it really revealed that the market was definitively headed towards 1100, if not higher. And what we got was exactly that. The market did kind of play at some lower levels, but then it gave a final boost and it got itself above 1100, drifted back below, drifted back above. And then as we got into the close, they just came in and they pushed. There was a great demand and everyone needed the stock. And it actually went up to the next strike, which was 1120. The first it went through 10 and then it hit 20. And closed well above it, actually. So going to be an interesting day tomorrow. As Globex starts here, it has gapped higher, but the market has already gone back down, filled that gap, and is now beginning higher again. So let's take a look at where we are and what I believe is happening on an Elliott basis. We continue to count a intermediate degree B wave up off of lows, and within that C wave, we have completed, which will be comprised of 5 waves of minor degree. We have completed minor waves 1 through 4, and that we're in this minor 5th wave. And within that minor 5th wave, we are now also within the final 5th wave. So we're within minute wave 5 of minor wave 5 of an irregular intermediate degree wave B. So I don't want to get caught up in the actual labeling and the degrees. So what I've now done is I'm just showing on the 15-minute chart where we are within this minute 5th wave up, which had completed waves 1 through 4. In my estimation, putting us in this minute, subminute 5th up. Now, rather than get into that degree count, which can be very confusing, I'm just going to put it, we're in a 5th wave up. And within the 5th wave up, it is going to have its own 5 waves. Here we have wave 1 and 2. 3rd wave subdividing beautifully and very well. We have 1 and 2. And I'm putting the 3rd of this internal 3rd wave here at basically the opening high at 15,898.25. And off of that, we're doing a small wave 4. And this 4th wave has so far just dipped below. I'm going to open this up so we can take a look at it. Has dipped below the 15-minute 8 and now recovered it, and actually recovered back above the 4, 15-minute 4, the MA. So we could now be heading up to complete this whole sequence. We have 1, 2, 3. This could be a 4, or the 4 is still in play. We get a small decline, and we get a little rally, and we come back down again, maybe down to the 15-minute 20, or even to support. So we have 15,835-ish, I'm going to call it, and then we have 15,810. I don't really think I need to see it below 810 because basically the no break zone is sitting right there at 15,777. This being a 4th wave cannot overlap the price territory of wave 1, and that's where that sits within this sequence. So can't break there. If it does, it's something different, and we're going to have to look at it differently, and giving more credit to or giving more support to possibly this high in Globex completing this picture, this sequence. But we're going to let the market tell us. But my gut and my viewing the structure itself is telling me we should continue to have additional upside. So what I've done, if I can take this out just so that I can show it a little bit bigger, is we have again the 3, the 4, and what I've added was the Fibonacci extensions for the 5th wave, and those are right here. So we've already reached where this fifth wave is equal to 100% of the way three at 15,892. But it is this fifth wave that is truly subdivided. So the extended third wave is here in this third rather than being in this third. This third was just basically your normal 1, 2, 3, 4, 5, and off it went and got up here, and that was it. This is extending more in a more complex fashion, and that fits to where it's finishing. It's finishing and a longer term, 5 waves up within a C wave. And this is kind of when we would look for those types of extensions within the fifth. So 1, 2, 1, 2, this is a 3, we get a little 4, we get a 5. That completes this level third. And we still get another 4 and another 5. So let's take a look at these upside zones. 16,000 remains very solidly in the picture. It kind of drifted, but I never let it go. And I explained why. And I said that, the market can do very strange things up here as we scream to these new highs. And it's easier to do based on the fact that we don't really have resistance points that we can go like, okay, well, back in September, we reached this, or back last August, we got to this high. And so look for that. We're in uncharted waters. Every time we go up, gapping higher today, it's uncharted waters. You have to stop and go like, okay, who's following behind me? Nobody else. Oh, good. I bought the top. And because we don't have any of those points. So we rely more on the Fibonacci and the relationships that we're trying to tag and trying to work out. So again, bearing in mind that I do believe we're in an irregular B wave, those Fibonacci levels remain the same. The first one being 1.236, and that's at 16,024. Well, that fits very cleanly in this nice tight zone we got going on right there. The second, and actually it's the second level, but it's also the most common, is sitting at 16,220 right here. So both remain in our picture. Now, again, 1, 2, so we have a third, 1, 2, 3, 4, 5. This 3 gets put up there, a 4 and a 5. Is this possible? Absolutely. What's going to propel it? Your guess is as good as mine. My point right now is that I think it's short covering. I think and it's not voluntary. I think there are positions being closed out because there's too much risk and there's not enough money left in the account. So they're getting closed. Their risk is far greater than what they actually have. So that gets closed by clearing firms, by the brokerage houses. That they're done, and that's what happens. So that could produce it. And a lot of it, I think, is coming from Tesla's moves, the strength that we've seen in Google, the strength that Facebook turned around. Now, Facebook, exactly, these are the stocks we looked at as well for the expiration cycle. We looked at them and we were saying that even in Facebook, betting against bad news, it still appeared that they wanted to at least get to 320 to 330. And that's kind of where they got to. So Google, we were looking at 2950. That's kind of where it got to. It got even higher. Apple, I believed would go, I thought they were really going to shoot for 150. And they got very, very close. So what happens is all of those 150 calls, 150 puts get exercised. That throws a lot of stock out into different hands on both sides. So tomorrow could be a very bullish opening. So we'll see. Or it could be very bearish. It depends on how these larger traders, the larger firms, how they're coming out of that expiration. And there's all the different component companies that the same thing happened. They had expirations and they got strike prices, et cetera, et cetera. So including the NASDAQ itself, we have NDX and we have NQ. So we've got a lot of options coming into play, and it's going to force movement. So I believe that movement's going to be up. So these are the zones. Now, downside, it can't break here. If it breaks 15,777, then I'm going to have to, right from here, let's call it, not before it goes up here and then comes down and goes up. Then I definitely would be looking for it. But in the context of what's happening right now, if it breaks here, then the next level that it can't break is right there. And that's down to 15,715-ish. Okay. So if it breaks there, then I'd have to think that this whole sequence is done. And then the B wave is done. So it's got to drift back over, well over 100 points for that to happen. Initially, it's just about, yeah, it's 100 points, right from where it is. So initially, that would be the level. 100 points down from here, from where we are, 15,878, is going to start changing the picture. The absolute last zone to keep the rally alive, okay, from this level. If it already goes up into here, comes down and goes up again, then that's going to be more of a completion. Then I definitely am looking for it to break here. But right now, I don't think it's finished to the upside. So these are our zones, and then this is the zone. And they're all very congested. You can see they're congested all the way up to 278. Not really expecting that, but again, a lot of this I truly wasn't expecting. They were there, but I didn't think the market had enough and then I saw what they were doing option wise in stocks like Tesla and some of the other bigger tech stocks. So for tomorrow, leave open the possibility for continued upside and for it to be strong. And so and as a day trader, we have to be able to trade both sides. And when one side is heavy, regardless of the levels. So somehow you got to wrap your mindset around it's going to go and it just goes. And all I'm doing is trading the number. And you're looking for a number of points. You're looking for points that now you can reach and what resistance levels and where moving averages are, et cetera, as it works its way higher. Once this does complete and we get a little 4 in, then I will be able to run an additional layer of extensions up from the bottom of this small wave 2. And again, I'm going to do something so I can go in and take a look at it. So hold on, let me go in here. At the bottom of wave 2 to the top of wave 3 to the bottom of wherever wave 4 comes in, and it might be right there. Then you're going to put your extensions there, and that's going to line you up for where this 5th wave has potential of ending. And then you're going to be able to pull the chart open and see where you're getting the overlap and where all these zones start to get double reinforced. So there are methodology. And so I do think we're in these final throws higher, but it's extending and it's also picking up steam because of the moves in the underlying components. I do not really feel that it's this massive turn at all-time record highs to announce we're really just blasting within a bull market. Because if we are, we're blasting at the end. So we're blasting to get to highs that may not be exceeded. That's what I'm going to leave it for today. Trade smart, trade according to price action, trade according to the moving averages, work out your Fibonacci. They all are helpful. They're guides. And hopefully everybody walks away with a successful trading day tomorrow. And the next update will be Monday, the 1st of November.